Over the last 4 days, tech stocks have been sinking. AI leaders like Nvidia, Palantir are all dropping. Let's find out what's going on with Andrew Vuk. He's with the Waterfront Group at Wellington-Altus Private Wealth. Thanks for joining us today.
Thanks for having me, Rella.
What do you think is a trigger for this outflow from tech?
It's a good question, and a lot of the things that we've been looking at here, tech-specific, Mag 7, all these AI names, I think people, investors, and allocators are starting to pump the brakes a little bit, waiting to see what's going to come out of Jackson Hole in this Fed meeting. Markets seem, in our opinion, like they're priced to perfection here, which means, things can go a little sideways. So I think people are taking a pause, taking profits off the table, realizing that valuations are stretched. I mean, you had mentioned Nvidia and Palantir to be more specific in correction territory here over the last week or so. And you're looking at it with PEs north of 200, and that's a company that really has had its fair share of a run. So waiting on interest rate announcements just to see how things are going to go in the economy. And, perhaps people have put the cart before the horse here and priced in some cuts already, and markets are taking pause.
Do you think that this will continue? We do expect September typically, historically, to be more of a volatile month.
And I think as we go into the fall, you usually get that where you have that pickup in volume. People come back from the summer holidays and whatnot. I do think right now what's going to dictate a lot of this is just the feeling on the economy. I mean, you'd mentioned there the Fed and their worry more about inflation over jobs. A lot of market watchers, ourselves included, are kind of worried about the two, and perhaps, the possibility of stagflation. Bank of America released a survey earlier this month, and 70% of respondents are worried about stagflation. So I think you are going to get a little bit of a, come back to reality moment here for AI and big tech. But I think everyone is just trying to see and feel out these tea leaves, where exactly the market is headed here, and that should continue into the fall until we have some more meaningful direction from the Fed and rates.
Okay, can you expand as well why you are more neutral on Nvidia, more bullish on Palantir?
So we like the overall story for Palantir, just the future growth prospects. And to be clear, we're not buyers of each right now. We're actually trimming for clients who do own those specific stocks. Nvidia is the darling in the room. They're the ones to beat, and I think a lot of people in the AI space are going to catch up. Palantir obviously has a lot of ramp to go, but at the same time, as I mentioned before, that 200 PE valuation, earnings are just not there for where the price is. So would we be buyers if it continues to pull back? I think we certainly would be for a next cycle.
Okay. Home Depot missing on EPS yesterday. We saw target numbers as well this week. What is it telling you about where the consumer is right now?
It's a good question. We've been watching all of the retail earnings. You'd mentioned Home Depot, Target, Lowe's, TJX, Walmart's a big one that's going to be coming out tomorrow. I think people are tightening their belts just with this protracted, tariff kind of or trade war, I should be more specific, that's going on between the U.S. and some key partners in Canada, China, and Mexico. I like the fact that you're seeing some good same-store sales growth from all of these. And a nice thing to see for all of those companies, as I had mentioned, I think really TJX and Walmart just being on the more budget or discount side, it's good to see that there is some healthy growth there. So we'll continue to watch. As I said, Walmart's going to be kind of top of mind for us tomorrow just to see what the overall consumer is doing. And you've seen it in some of these other high-end companies or retailers. The earnings have not been there this season, and consumers are starting to kind of make their voice heard.
Okay, Jerome Powell, as you mentioned, will speak at the end of the week. What are you watching for there?
I think the biggest thing is, will the Fed stick by this, dual mandate? And more specifically, are they going to be targeting average inflation? They've done that since pre-COVID. I think you'll see that Powell in what is to be his final speech as Fed chair is probably going to say that the committee is looking, or the board is looking more at just targeting that hard 2% inflation rate. Going to be interesting to see if some more dovish comments come out just to appease to all market makers. I think the market has it right with a 25 basis point cut, that's priced in for September. So that's what we're going to be watching, just their commentary on this push and pull between inflation and full employment and what exactly they're thinking as we head into the fall and end of the year.
Okay, so you mentioned, Andrew, you are trimming in tech stocks, for example. Where are you putting money these days?
It's a good question. I think two big items that we've been looking at is, well, how do we diversify client portfolios? Many investors, watching the show, our clients included, are pretty centric or heavy in U.S. stocks, and as such, you kind of get that overweight in tech. One of the big ones that we've been leaning into is the equal weight S&P 500 ETF, EQL from Invesco. We think now is an opportune time. It's been 2 decades since you've had this diversion between equal weight indices and the broader S&P 500. So trying to just diversify clients, try to go into different sectors where earnings haven't been there yet, but looking down the road 12 to 24 months. The other big one is gold or precious metals. A little bit of a sideways trade here the last 4 to 5 months, but we still think there's good support levels in at the $3,200 per ounce level, and quite bullish on gold and precious metals as we move forward as an inflation hedge.
Are you putting cash aside as well?
Some cash, absolutely, just with everything going on and the market environment. I think our job is to be good allocators, right? You don't want to have too much on the sidelines. When we are trimming here, we'd like to find a home for it kind of in quick pace. Otherwise, you're kind of at the mercy of a declining interest rate environment where we don't want to have it on the sidelines for too long. So I'd say we're kind of neutral in our cash weighting currently, and whenever we can get it to work, looking for some good pockets of value.
All right, Andrew Vuk, I'll leave it there. Andrew is an investment advisor, Waterfront Group at Wellington-Altus Private Wealth.